Welcome to After Hours at Traders Post for Friday, October 17th, 2025. I'm one of your hosts, Tom Hartman, marketing manager here at Traders Post, joined by Peter, Exit Liquidity Hartman, to break down the market madness. After Hours is your go-to live stream focused on macro trends for retail traders. That's dollars, equities, and policy for the uninitiated. After Hours is brought to you today by Blue Sky, the best-in-class prop firm that offers same-day activation, daily payouts, and no max restrictions. But we'll tell you more about them later. For now, let's dive into markets. Peter, what a week it's been. Price Action Live is a show here at Traders Post that happens Tuesdays to Fridays, 9:30 a.m. Eastern Standard Time, where you get to see yours truly, Tom Hartman, and Mike Christensen get our teeth kicked in trading prop firms in the market. Why do we do that? For your entertainment. Presumably in order to make money, but for your entertainment. Because
How did you get your teeth? Go ahead.
No, I have not gotten, sometimes got our teeth kicked in, sometimes not. I've sort of figured out a pattern here of how to make money, but what's getting kicked in is assets are just laboring, right? We just have these violent, volatile days. It seemed like to me when I was taking a look at when we were looking at the stock market, when we were trading it from September on, we had sort of like these flat days. Fine, it was up and to the right sort of thing, but when you don't get a bunch of volatility within the day, sort of boring. Well, compare that to the last few days where we had massive drops, run-ups and overnights. It's just been all crisscross applesauce all over the place.
And does it make it more fun to trade when it's like that?
For me, yes. I know Mike doesn't very much enjoy when markets are just moving willy-nilly for no reason. We like when either technical analysis is what's supporting markets or macro trends. But when the macro trend is Donald Trump tweets at 10 a.m., you sort of can't prepare for that. Hard to scalp that market. Hard to trend follow that market. So it's pretty interesting. But we're here as card-carrying members of Traders Post to let you know that it is possible to make money in these markets, and that's what we want to use the news that we pay attention to for. We're going to go over what's been going on with the dollar a little bit, what's been going on in risk assets, and especially for crypto, and then what is happening on the policy front, because that's just absolutely crazy. Policy usually, Peter, isn't this bananas? Usually policy is pretty boring. We're going to decide to raise interest rates by 25 basis points. We're going to be data dependent, and we'll come back in about 3 to 6 months and see what needs to be changed. It takes about 1 year to 2 years for policy decisions to eke through the economy, and we're noticing an uptick from 4.1 unemployment rate to 4.2.
I'm falling asleep already. Exactly.
Now it's like... Hey, Jerome Powell, do you think you're going to leave office because Donald Trump tweeted out that you should be removed from office? Hell no! we had that. Well, I'm going to go over some of the other stuff, but one of the tidbits here was that a journalist asked Donald Trump, hey, don't you think what you're doing, what you're saying, and how you're talking can start a trade war with China? His answer may surprise you. So let's start off with the dollar.
Before we do that, a Ventura trader in the chat says, crisscross applesauce pattern makes me hungry. Yeah, and I want that too. Good to see you, Ventura. Thank you for being here. Thank you to everybody who's watching. Remember to like and subscribe if you like that kind of stuff. Tom, you're going to be talking about the dollar right now?
Yeah, absolutely. So the dollar, as we know, we look at that. That's the barometer for financial conditions within the market. If you're not looking at NFCI, financial conditions index data, if you're not looking at reports coming out of treasury markets to see how auctions are doing, if you're not looking at bonds from other nations and looking into shipping containers and population densities and all kinds of consumer spending, a good proxy, you just want something to just throw on the chart, you just want to pay attention to, is the US dollar, the trade-weighted US dollar. I take a look at dollar futures on my chart right now, so it's a little bit off from the DXY that people normally see. That doesn't matter. What really matters is the pattern of movement. Plus, on futures, we get volume information, which is what I like. And because of the volume information, we can see here that we've been in a consolidation pattern for the dollar for the last basically since let's call it April. Now you guys will remember the beginning of March was actually beginning of March or mid-March was full-on tariff problems, right? Stock market dropped 26% because Donald Trump was saying, you're going to have a tariff, you're going to have a tariff, you're going to have a tariff. And we didn't know what was going on. We didn't know what was going up and what would stick. And those tariffs, first of all, weren't even cemented. It was sort of like, we're going to say that the tariff is going to be 50%, but give us a call and we'll figure it out. We'll figure out what your price is, like buying a used luxury watch. It was crazy. And so the dollar fell upon Donald Trump's becoming president because he's always been pro liquidity, pro credit, pro stock market. And so the dollar falls there just like it did last time he was elected. But then it stayed in this range. Stayed in this range between, let's call it 100 and 96. And it's just been going sideways ever since. And every time it goes up, I get super nervous because that means equities will go down, risk assets will go down. And when it goes down, I get excited because I go, hey, that's Bitcoin, $250,000 per Bitcoin. That's all-time highs. It'll be great. But we've been doing this sideways thing. In fact, this last drop in September, I thought, oh, okay, that's it. We're going to fall. Bitcoin's going to rise to $250,000 by the end of the year. This is going to be great. Fantastic. Hey, gold, you can stop going up. We're going to top on that. Money's going to flow out of you into other risk assets. Nope. Decided from the bottom of September to rise up to worrying heights back to the top of the range. And now it's pulled back into the middle of the range, as evidenced by the price and this yellow band in the middle, which is the volume weighted average price with my secret sauce that gets displayed on the chart. So that means we have no idea what the dollar is doing. And if we don't know what the dollar is doing, if the dollar is consolidating, if the dollar is not trending up or down and is going sideways, that means the whole world doesn't know what to do. Because this is a balance of transactions throughout the world.
So we need a crisis, because if it continues like this, I don't see Jerome Powell cutting again, will he?
No, they're going to cut. They're going to cut. They have to cut. All the markets are screaming they have to cut. First of all, the Fed does what the market prices in, okay? The last thing the Fed wants to do is scare the little baby bird of the market, okay? They know they're in charge of a house of cards, a whole thing built on debt, and they don't want the thing shaking. And if that requires all-time highs every day, then that's what they're going to do. And so they're not going to come out and go, look, we understand you guys want rate cuts, but we're worried that you guys are being irrational with this exuberance and your animal spirits have gone wild and the stock market's really got to come down a bit. So we're gonna pause on that, but sorry. No chance, nada, yet, never going to happen.
Okay, all right, good.
Ever.
Happy about that.
The volatility we're getting is from the administration.
Wait, you're going to put this all on President Trump's shoulders?
It's not only on his shoulders, it's on his Truth Social account. We're getting policy out of that account, but we're getting ahead of ourselves. Let's just go ahead and pay attention. So with the dollar, because it's consolidating, we don't know where things are going to go. We're past the period of weakness normally in September, the quarterly OPEX period that we talk about every week. So technically, we should be looking at all-time highs, and we're getting it. We're getting all-time highs and then massive sell-offs, all-time highs and then massive sell-offs. So it's like we don't know necessarily what to do this period of uncertainty. That's what the dollar is telling us right now. Move on to risk assets. Now, when I'm going to risk assets, I'm talking about assets, the indices for the S&P, Dow Jones, Russell, and NASDAQ, as well as Bitcoin. All right, so I'm looking for indexes and Bitcoin. The reason I'm paying attention to that is that these are the assets that are one way or another correlated with they're an aggregate of wide swaths of the market, and so you're getting an idea of what these what the market is doing. It does not mean that individual names, individual stocks can do better or worse. That doesn't mean that. It just means that it irons out all those differences, and you get this more stable asset in the index. So when I say risk assets, that's what I'm talking about. I don't normally talk about gold because that's something different, and I don't normally talk about individual names because they have all kinds of risk. What CEO they have, what revenues they have, what's their earning reports, all that stuff happens.
Right.
So I don't like paying attention to that. So risk assets, when we take a look at the NASDAQ, we've been seeing that we did reach an all-time high in on the 10th of October, which is when Donald Trump decided to drop a bomb. He dropped a deuce on markets by saying, China came out and said, hey, rare earths, that those core components that are necessary for the AI chip development for semiconductors.
Yeah.
And most of that comes from us. Yeah, we're gonna have to renegotiate how you're actually getting those, and maybe you're not gonna get them at all. Donald Trump, not a fan, tweeted out, hey, you want a war? We'll give you a war. 500% tariffs. Let's get it started. Boom, market was down. And the oscillations we've been seeing over the last week of this up, down, up, down, up, down, up, down, crisscross applesauce, is that every day there seems to be another tweet that either reneges on the tariff deals or promotes it.
Well, look, if you know that these tweets are coming, if you're on the inside, then you could be making some money on these bounces.
Let's not even talk about that.
Where's my tinfoil hat? Where's my conspiracy theory hat?
So we have, and then there's this whole thing where the Wall Street Journal had a paper, an article out saying that Beijing's strategy, and because they're going to be negotiating with Donald Trump soon, I think it's next week, that they want to tank the stock market and squeeze Donald Trump in the public space to get concessions from the Trump administration in order to get better deals. As you might imagine, Trump is not a fan of this. And so some days he says things are going well, and some days he says things are going poorly. So we had here on October 14th, Watch Guru, who says, just then President Trump and Chinese President Xi Jinping scheduled meeting to discuss trade. White House officials confirms. But then we had Scott Bessent coming out. I mean, let's just hear a couple of things that Scott Bessent's been saying, okay? Our dreamboat Scott Bessent here. Let's just go ahead and take a peek. Give me 1 second here. Let me get him up. So let's just hear a couple of things he's been saying, a couple of small clips from the press conferences he's been doing.
Shutdown when we can't get 7 more Democratic senators across the line, but 85 U.S. senators are willing to give President Trump the authority to put up to 500% tariffs on China for the purchase of Russian oil.
So that's 500% tariffs on Russian oil. So instead of blanket, on Russian oil. Then later on, Donald Trump says, hey, maybe we don't need China for soybeans. After all, maybe we'll grow our own soybeans. It's one of the major exports, and China could lose billions of dollars otherwise. And so that roiled markets. People are like, are you trying to negotiate in public? What's going on over here? This is Scott Bessent talking about, well, it's not Scott Bessent, but it was the press conference that he led. But there was apparently an agreement made between China and United States that back in April, that they're going to nix the tariff things. It won't be as dramatic if they keep the rare earth minerals flowing. So let's hear what they have to say. The audio's a little bit off, so you might have to strain to listen.
Others have suggested that the United States has violated a non-existent agreement with the Chinese regarding export controls or the implementation of measures. This is a false narrative deployed to justify these broad and unacceptable Chinese actions. There is, in fact, a published agreement between the United States and China from earlier this year that the US and China would suspend tariffs of over 100% on each other. China further agreed to effectively suspend elements of its rare earths export control regime by expeditiously approving licenses for US companies seeking rare earths. Both countries agreed to this pause on tariffs and rare earth measures for 90 days while we pursued further negotiations, which have gone on quite successfully for the past 6 months. And there is a published agreement about this on official US government and Chinese websites. This is the Geneva Agreement. It's not a secret, it's out there, it's published. We keep our tariffs low, they keep the rare earths flowing. We have not imposed our reciprocal tariffs on the Chinese since that time, but now the Chinese have expanded their rare earth controls. And so in this context, this is how China has announced its new and extremely expansive controls on rare earth materials just last week. It's a clear repudiation of everything we've been working toward for the last 6 months, which was a stable tariff situation and a continued flow of rare earths. The short story is that we've had compliance, and the Chinese have escalated, and they've taken this opportunity to make a pretextual claim of non-compliance or other measures to justify this. But the United States won't stand for it. We're in close communication with our allies who have expressed similar views and who are similarly affected. The President has signaled some of the actions we are taking or may take if the Chinese implement this system of controls on the world. Others.
So given the fact that China is one of the main production engines for the global system, and the American empire is the largest consumer of global products, and this has been the case now for 50 years, they're not flipping the monopoly table, but they banged in that table real hard, and the pieces are shuffling around, and people are sort of like, okay, what's going on? So all this uncertainty has been reflected in equity markets, and we're seeing quite a bit of volatility.
I don't understand. If things go bad for America, don't things go bad for China? And what's the chips? Don't we all need chips? I mean, I don't get it.
China representatives have come out and said, America is not the only market out there, and we can survive without America as a consumer. Now, we don't know if that's bravado or not, but they have been positioning themselves, gathering resources in order to be able to at least survive in an economic war. It's sort of like how...
Well, I mean, I could survive without my mom paying my rent. Sure. I'm just joking. It's not. No, but why would I cause trouble? Why would I do that? Like, why would I?
In the great words of the architect in the Matrix, there are levels of existence we are prepared to accept.
Sure, if you're like a robot, but I don't understand the world that exists if America is diminished severely. I mean, if we don't have microchips, but it's over, right? Isn't it over?
Well, we don't have to get into the weeds of it. The idea here is that there will be semiconductor chips, and they will find themselves to where they need to be. And if they need to be stolen, or the technology taken, or needs to take a 10, 15, 20-year break while they develop their own, fine. Like, there are levels of things they're willing to do. These are superpowers that are at war with
I say do it. Call their bluff. We need to know what the rules of the game are. I want to know what China is willing to do. If we don't, look, you can't negotiate. Okay, never mind. I was gonna bring up some Jack Bauer type language, but I don't want to cause an international incident. At least not today.
Right. Well, so that's what we're seeing with equities there. Now, we've had this whipsaw in equities. Now, the thing is, you're going to notice a very big difference between this NASDAQ chart and Bitcoin. All right, it's Bitcoin over the same period of time. Bitcoin has not been whipsawing back and forth. Bitcoin has just been falling. Now, fine, it's only like a 17% fall. Not a big deal, right? We can expect 33% drops on Bitcoin all the time during the bull market. Happens all the time. Perfectly healthy. The problem that people are having is a couple of things. One, and I'm glad to see more people mention this, they go, hey, wait a minute. Didn't the last two bull markets for Bitcoin last 1,064 days before it peaked and fell?
I've only heard
And
you say that.
Yeah, some people have been saying it online. More and more now people are picking it up. And now that we're getting close to the date of October 20th, which would be the 1,064 days, people are going, hey, wait a second. What if we topped?
Yeah.
What if we topped? And we're not seeing Bitcoin respond to the positive tweets from Trump. So we're seeing this downward spiral. Now, there's whole conspiracy theories around what's going on in behind the scenes, the manipulation that's happening within the futures market for crypto that is causing massive liquidations and anyways, for the price to have the selling pressure on it. There's conspiracies there. I don't know what's valid for there. Sure, I could read the blockchain in order to figure this out. Your boy is not interested in doing that. I just report the gossip. Okay, you guys go take a look at that. What we are seeing is that the price of Bitcoin is falling. And now that we've broken down below a key level, the next level I'm looking at for Bitcoin to fall to would be around 92, 94,000. Okay? If it falls below this red line, we're looking for potentially the bear market for the next year. That's right.
Pour one out
That's
for the
right.
homies.
Hang up your capes. You're on break for the next 400 days. And
On break? No, you can still make money in the bear market. You told me that.
Yes, absolutely, you can make money in the bear market. So you got to make sure that you turn to the other side. I'm just saying the people who want Bitcoin to get to 250,000. Sorry, doesn't look like that could be the case if that's how things move.
Gotcha.
I thought this interview with Arthur Hayes and Tom Lee, very popular within the crypto space, was very interesting. This was done on October 14th. Actually, saw my screen for a second. I have to share something else. This is so they were asked a few days ago. This is a few days ago. They were asked about their predictions for Bitcoin by the end of the year. Please.
And what's special about these people?
Very popular. Tom Lee runs a hedge fund, I believe, and Crypto Hayes is one of those guys. He's in the crypto venture space, billionaire in Bitcoin for the longest time. You know, crypto famous.
Right.
Arthur Hayes is crypto famous, but Tom Lee he's on CNBC all the time. He's cited often as someone whose predictions should be paid attention to. Gotcha. And Bankless is one of the biggest crypto podcasts.
Arthur, what do you think the year-end ranges will be for both Bitcoin and ETH?
So I'm going to stay consistent. $250,000 Bitcoin, $10,000 ETH.
$10,000 ETH. You think ETH can do more than a doubling in 2.5 months?
Yep.
All right. Tom, Tom, you dropped off really quick, but the question is end of year price targets. We got 2 months, 3 weeks before December 31st. What do you think ETH is going to be? What do you think Bitcoin's going to be?
Yeah, but by year end, our target for Bitcoin is 200 to 250,000, and for Ethereum, somewhere between 10 and 12,000 ETH.
Even higher than Arthur. So that's basically what Arthur just said.
I mean, if Tom says it, this is going to happen.
Is that not a little bit fast, Tom? So like I said about this last year of price action, especially Bitcoin over the last 3 years, it's just been slowly incremental up. If you're telling me ETH is going to do like almost a 2.5x in 2 months, to me, that is no longer incremental. That is starting to become closer to a blow off top territory, which I don't want. I want the slow incremental price rise for years. If it did do a 2.5x, wouldn't you be worried about it kind of just being a little bit too fast?
I mean, as you know, Ethereum's basically been basing for 4 years now, just broke out of the range. So to me, it wouldn't be a blow off top, but rather seeking essentially price discovery at a new level. And then at a time when I think there would be a lot of fundamental things happening next year. So I don't think it's the top, but I'm sure, but it is a big level. Be a big level, but a happy level.
All right. Lots to unpack there. But before we do and get into the nitty gritty of, hey, could this happen? And if it did happen, what are the ramifications for there? And what's the policy like inside of the United States on the monetary and fiscal side that will lend to that? But before we do, let's take a quick word from our sponsor.
Looking for a prop firm that actually plays nice with automation? Meet Blue Sky, built for serious traders. And with Traders Post, it just clicks. You connect Blue Sky inside Traders Post, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with Blue Sky. Execute with Traders Post. Apply today at bluesky.pro, BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
Bitcoin at $250,000 by December 31st. Peter, do you believe it? Do you look at this chart and think to yourself, yeah, actually, I'm going to pull it up. Yeah, I could totally see that. I could totally see, forgive me, yeah, there we go. I could totally see Bitcoin being at $250,000 by the end of the year. $250,000 would be a rise here of, from where we are right now, 135% in the next 2.5 months.
Look, when I look at the charts, what I see are is nothing. I don't see anything when I look at the charts. They don't tell me a single thing. They make me feel
Exit
inferior,
liquidity, Hartman over
insecure.
here.
No, I don't think you can get to 250 by the end. No, I don't think so. I don't think that's going to happen. However, I am getting a sense, a feeling. I'm going to get my tinfoil hat again, that there's some kind of manipulation going on in the Bitcoin space, in the market, where big players or whatever have an incentive for Bitcoin to be as low as possible before they buy, right? So maybe something's happening behind the scenes. I don't know. I feel like we didn't get the energy level with Bitcoin this bull cycle. So I feel like I honestly feel like, no spoilers, I feel like season 2 of Squid Game, you know? It didn't end in any satisfying way because it wasn't the end of the season, and like something happened, and so I feel disappointed with the bull run of Bitcoin, and I feel like there's got to be more. And then I heard, oh, they already shot the next parts of Squid Game. Anyway, I'm getting too deep in the weeds here about Netflix, but I feel like the wheels are in motion. Things are happening. All right, that's for all my Seinfeld fans out there. But if not, then no, I don't see how is it going to go up that high. And if it does go up that high, that's too fast, too much, too soon.
So I've been struggling with this idea because if Bitcoin did rise to $250,000 or anything, let's say we didn't top, that this is not the top for Bitcoin, and we get past October 20th,
right?
That means the previous cycle, the duration of it, is now invalidated. The 1,064 days is invalidated. And the further off we get, if we end the year and we're 2 months into this thing and we're still sky high, we have to rethink about what's going on with the liquidity cycle.
Right.
Completely rethink about it. So let's say we put that off to the side and we go, okay, we haven't got the euphoria, we haven't got all the different types of top-in signals, and there's still more room to go. You would expect this has to be based on liquidity. Like, liquidity is necessary for this move to happen. People have to have money. Either retail investors have to have money, or institutions have to have a propensity to invest this money into high-risk assets for Bitcoin to get to $250,000. Right? How else is it going to happen? Well, if we take a look at, this is a tweet from Cross-Border Capital, my go-to guy for liquidity within the system. He's talking about here that liquidity has been flagging. And the Fed, if it doesn't add more liquidity, and it looks like now it's pulling out liquidity, we're going to have a tough time. So we're not seeing the liquidity dump. We're not seeing the the Fed cut by massive amounts. We're not seeing stimulus checks coming out from the government. We're not seeing prices falling in a deflationary spiral in such a way that people have more money in hand. In fact, we're seeing unemployment rate tick up. We're seeing job losses. We're seeing we're seeing revisions to job data. People have less money. And institutions have a less propensity to spend on high-risk assets because of the volatility of the Trump administration. They don't know what he's going to say or decide to do at any given time, which makes him a lovable rascal, don't get me wrong. But it makes it very hard for you to bet $2 billion on something if tomorrow a tweet can come out and you can get completely liquidated. There are people last Friday who lost everything.
Right.
Millions upon millions, hundreds of millions of dollars completely liquidated. So it's hard to make decisions like that. People are going to want to come into the markets like that. I don't know. Now, on the other side, because of how bad things are, and because of how much Donald Trump does want the markets to be up, I can expect that he does do something. Like if he came out tomorrow and says, "Okay, we're sending everyone a $5,000 check," I would not be surprised.
5,000.
All right. Like if it's just okay, we have to put money in the hands of Americans. We're going to send $5,000 to everybody. I don't know, whatever. Just like when who was it? George Bush Jr. sent what was it, that stimulus check to everybody. Hey, and people are like,
I get stimulus checks, but I don't see 5,000. I mean, they didn't even get 5,000 during COVID.
There was some crazy thing. Hey, now we're going to do this. I could totally see that happening. And when we take a look at the liquidation map for Bitcoin, we're seeing the amount of shorts here. If we take a look at the Binance, OKX, and Bybit exchanges, the leverage amounts, we're seeing here we're back up to $18 billion short and $100 million long. So that's fodder. That means basically Bitcoin can move up in 18% just like that. Snap of a hat, just liquidations, it can move up just like that. And even though I've been talking about the whipsaw that we've been seeing in the NASDAQ over here, if we zoom out to the NASDAQ on the daily, that's just an uptrend, buddy. We're in all-time high territories. We're in that territory. And so once we just get past that hill a little bit, I think we can get that euphoria. I think we can get that move up. And when markets are up into the end of the year, you get the Santa Claus rally, you get the run up in January. All these things can actually happen until the next window of weakness, which will be March. So yeah, it is possible that Bitcoin gets to $250,000 in a straight shot. 136% on Bitcoin is not crazy. It's not crazy. It could totally happen.
So you're basically like about to tweet out, now would be a good time to buy, right? Is that what you're about to do here? Is that the trade?
For Bitcoin? Well, as far as I'm concerned, Bitcoin's a good time to buy whenever it's down. People go, it's down. I go, okay. You're just worried about the cycle? Because fundamentally, you know it's going to go up. I was talking to someone earlier today, and they're like, the same conversations you have around people now talking about Bitcoin if should buy it is the exact same conversations they were saying when Bitcoin was $10,000. Exactly the same thing they were saying when Bitcoin was $2,000. Excuse me. Wrap your head around the dynamics as to why markets go up and to the right, because the fiscal and monetary powers want them to go up and to the right, clearly, and put on your adult britches and start buying what you need to buy. Not financial advice, do your own research, but goodness gracious, markets go up and to the right, folks. Markets go up and to the right.
Very good.
All right. So the last one I want to touch on here is policy. So as far as risk assets are concerned, NASDAQ and Bitcoin is like that. Just to touch on gold a little bit. Gold, $4,000 per ounce. It's up because central banks around the world buy gold. When gold is up that much, because central banks are buying it. Why are they buying it? Because there's a worry for the stability of the financial system. All right? That's just what it is. Silver is also crazy up, which is nerve-wracking because usually silver doesn't match gold that way. But silver is up a significant amount. But put that aside. Policy. Now, we're just going to show you a couple of things that's going on with policy right now that I find interesting. But before I do, I just want to let everyone know that if you are you like this type of content and you're interested in more macro news and you want to find more information that's good for you as a trader, please feel free to subscribe and like this channel and click the notification bell in order to be notified. We're on almost every day, and there's always some piece of information that's useful for you in order to become a better trader or long-term investor. You can also go to traderspost.io in order to start your free trial, seven-day trial, in order to open up an account, because it is the software that I use in order to help me trade, because what it does is that it allows me to daisy chain multiple accounts together so that I only have to focus on one signal, one trade signal from one location. I set it off the Traders Post, and all of a sudden I can connect to all kinds of different brokers, all kinds of different prop firms, all kinds of different crypto exchanges. It's fantastic. 7-day free trial, no reason not to try it out. Now, touching on policy. So I'm just going to show you, without any commentary, just a snippet. One second here, Peter. Just a snippet from Stephen Miran, who was just added to the Board of Governors, a voting member of the FOMC, so the Fed. This guy used to work for Trump, and now
he got added.
Sorry?
He got added. I didn't know that happened.
Yeah, he voted last time. He's the only one who voted for 50
Oh,
basis
yes.
points.
I'm thinking about someone else. All right, good, yeah.
And just listen to this exchange that he had a couple of days ago.
So we were supposed to get an inflation report today. Didn't. Government shutdown. What do you think it would have shown?
Oh, well, you know, that's above my pay grade.
That's above my pay grade, he said. The Fed governor. Shutdown. It's above his pay grade. Okay. All right.
How are you looking at alternative data sources? Like, how are you piecing together what's happening? You're going to have to make a decision at the end of October whether the government's open or not.
So I would love to have the data that we need to make a decision. We are fortunate that we only make monetary policy decisions outside of a crisis every 6 months. And so I'm still hopeful that we'll have more data by the time we get to the point.
6 weeks.
Yeah, sorry, every
6 weeks.
Sorry,
Yeah.
thank you.
Yeah. That would be crazy.
Every I'm every 6 weeks.
Oops, sorry about that.
We only make monetary policy decisions outside of a crisis every 6 months. And so I'm still hopeful that we'll have more data by the time we get to the point.
6 weeks.
Yeah, sorry, every
6 weeks.
Sorry,
Yeah.
thank you.
Yeah. That would be crazy.
I'm every 6 weeks. Yes.
Yes.
So I'm hopeful that we have the data in hand by the time we get to the October FOMC meeting. However, you know, there's a chance that we don't. And if we don't, then I would rely on what I said a moment ago, which is that policy should not be overly data dependent. It should be forecast dependent.
That's not how the Fed operates, though. I mean, how many times do we hear Fed Chair Powell say data dependent?
I mean, I think that you want to be data dependent if you either you don't have a forecast or you don't believe in your forecast, right? Or you don't have.
But if you look at the
forecast.
forecasts of the Fed and the dots, they project their economic and inflationary outlooks. They're mostly not right.
You know, I think that is something that every forecaster should hold them, you know, should hold themselves to account for when they're right or wrong.
Okay. All right.
Mistakes were made. Mistakes were made.
It's incredible. So Cuppy here from on X, he says, I think I figured out why gold goes up every day. Listen to this. Wow. Yeah, totally understand. Gold is a measure of uncertainty. But these are policymakers, right? He's one of the policymakers on the monetary front. And on the fiscal front, we have Truth Social. This is the world we live in, folks. We live in a world of crazy volatility. So why wouldn't China be taking advantage of this and be like, hey, these guys, there's a rock in that hornet's nest. Let's get the fumigating. Let's get to clearing house here. Also, with the government shutdown, which is something we haven't even really hit on much, because it happens, you know, all the time when they have to raise the debt ceiling. We're seeing that regional bank stocks are plunging hard. So this comes from Jacob Kinch, who says, regional bank stocks are plunging hard today. This was a few days ago. They rely on short-term liquidity. aka cash on hand to cover daily operations. Weekly government payouts temporarily boost their cash via float, but when a shutdown stops those payments, banks must sell assets to stay liquid. Right now, large treasury settlements are draining cash, and banks are borrowing heavily from the Fed to cover gaps. That selling pressure ripples through the broader market. My theory is that, okay, and he goes on in the political rant, but this is what we're seeing here for regional banks, right? We have this selling pressure. The shutdown is causing liquidity issues. And so there's liquidity issues that are showing up everywhere. And meanwhile, the Fed doesn't want to appear as if they are following exactly what Trump is requesting. So, ooh, mommy and daddy are in the car and we're clearly lost, but daddy doesn't want to ask for directions. And mommy is backseat driving. This is going to be great for the future. But we're here for opportunities. This creates volatility and opportunity. So for me, buy crypto while it's down and trade equities like I've never seen a stock chart before. Just treat every day as its own thing and just get through that one particular day. It's been pretty fun. All right. That's all the policy news we have for this week. Oh, there's one last thing I do want to mention. This is a tweet from Jim Bianco from Bianco Research. He was considered to be I believe a Fed governor. This is where I find his information so useful. He's one of those guys who I think is too honest, and so couldn't pass the interview. And so he just points out that the bond market, the 10-year Treasury yield, is in this wedge pattern at a low end, and if this breaks down lower, that spells deflation. Or if you follow Keith McCullough from Hedge Eye, that would be quad 4. That's where growth and inflation is down, which is pretty bad for the economy and financial markets. But we'll see what's happening. We're not here to forecast what happens in the future. We're just here to let you know what's going on. All right, Peter, anything else you want to add before we wrap this up?
I've been really enjoying Price Action Live, watching you folks trade in the morning every day. I highly recommend people check it out. Like and subscribe to that. We got some killer interviews that I'm getting edited right now, going to be posted online very shortly. So Trading Bot Sessions, more coming to a screen near you. So like and subscribe for that.
Awesome. Well, we'll leave it there. We'll be back next Friday at 4 p.m. Eastern Standard Time for more market updates because as traders, we don't just watch the news, we trade it. But until then, we wish you, as always, happy trading.